Welcome to QAV. I don't know what episode this is because honestly, I don't know when we're going to put this out, but we're recording it for the record on the 13th of March, 2023. TK and I have a special guest with us today, Simon Shepherd from the Investment Newsletter Group, aka TING. Which is, I like that. It's a pretty cool acronym. Is it an acronym? It's an acronym,
Yep,
I think.
it is indeed.
TING. Welcome to QAV, Simon.
Thanks, Cameron. Good to be here.
So, according to Ting's website, or tinglive.com.au, if the people at home want to check it out while we talk about it, they track investment newsletters, do comparisons of the top investment newsletters in Australia, look at their buy recommendations, track the performance of their recommendations, and bring a little bit of much needed transparency to the investing newsletter industry. Is that a fairly accurate summation
summary
of what you're doing there, Simon?
Yep, that's spot on.
Do you want to tell us a little bit more about what it is and why you started it?
Yeah, look, great question, Cameron. I think being an investor myself and also a financial advisor, what I found there's plenty of choice out there with various newsletters, various styles. Some have been going for a long time. In fact, from what I can see, most of them have been going for a long time, which is probably a good sign. But there was no unified way to sort of check their results, no clear way to find it on each of their respective websites. They all speak a bit of a different language, both in the way they approach investing, but also if they report returns. So I thought, wouldn't it be great if there's some way we could, as best we could, do an apples by apples comparison, so to speak. So we built this thing, started tracking these services coming up on 2 years ago. All being well, over time we might expand it just depending on how things go. But we thought, 6 or 7 is a good start. Try to have a variety of different styles and investment approaches in there as well. What we did was sort of try to replicate what a typical investment journey might be for your standard sort of mum and dad, DIY investor, self-directed, SMSF trustee, whatever you want to call it, by building a hypothetical or a paper portfolio of 12 stocks, in each of the baskets. So one basket for each of those 7 newsletters, basically.
My big concern, Simon, is I don't think you really understand the financial services industry. Nobody wants clarity and transparency. The whole idea of the financial service industry is to complicate it as much as possible.
No one wants to talk to me. I was wondering why no one's picking the phone up.
Make it really confusing so people just throw their hands up and go, oh, well, I'll just do this one. Yeah, you got it all wrong, Simon.
What keeps me in a job, right?
Exactly.
Yeah.
So what do you hope to achieve with Ting?
Look, I think it's really, the idea is that it's a useful tool or a portal, just a research channel that people can use to help them make better decisions, better informed decisions. I can't stress enough, it shouldn't be solely used to make a decision. It should just be one of your toolkit of due diligence or research methods that you look at when you shopping around for a newsletter or looking to add more newsletters or whatever it is. But ideally, that's what we want. I mean, in a way, maybe it ends up being like a finder.com for investment newsletters, for example. So it's an evolving process, but yeah, at this stage, it's predominantly focusing on, let's have some hypothetical baskets in there, see how they go, periodically rebalance them, keep an eye on the buy list, etc. And in a way, in the nicest possible way, hold these newsletters accountable to what they're saying that they're trying to do, which is obviously beat the market.
And when do you start taking money from the newsletters to give them an upper hand in the reporting?
Would you like to be the first?
Absolutely, yeah.
Is that an offer?
We'll sign up to that deal. Get in on the ground floor. That's the way Google makes money, right? It's putting it gently.
They do very well. Yeah.
And some of the other comparison sites in other industries as well.
Yeah, exactly.
Which
That's
we won't
exactly
mention.
right. Yeah.
So can I just ask, Simon, great idea.
Thanks,
I
Tony.
went to your website. There's, I think, 7 or 8 newsletters ranked there. The ones I had a look at, the only common thing I could find about them was they were the ones that don't publish their returns. They don't have what we call a dummy portfolio on their website. So is that why you've picked them, or is there some other unique?
Yeah, possibly. I mean, probably that'd be a secondary consideration. It wasn't an explicit screening tool per se. I think it was more just let's pick a variety of different styles, and hey, great if they display results, fantastic. But to be honest with you, I didn't want to jump down that rabbit hole with, well, what is that chart and how do you work the numbers out? I'm like, you know what, I'll just do it myself, and where we can try to be consistent with our approach. Does that answer your question?
Yeah, no, it does. And I'm going to encourage people to go to your website and have a look. But I had looked today, and I think out of the 7 or 8 that are there were 2 or 3 who were beating the market. So
correct.
Has that been the consistent sort of performance since you've started, or is this unusual?
Yeah, look, good question. It's still early days with the data, so we didn't really start running any kind of cumulative, league table, if you will, till late last year. These numbers are, mid-Feb. We're generally speaking going to run a quarterly. We do monthly reviews and rebalances, but we'll publish results at the end of each quarter. And certainly as of today, those rankings are fairly, the numbers have changed a bit because the market's come off, as you'd be aware, since mid-Feb, particularly up to last Friday. But broadly speaking, they're kind of still sitting in that category. I can screen share with you if you like, or I'm not sure what you want to, if you want me to put the table up.
Let me just ask a couple of questions. So first of all, why do you think that the majority of the investment newsletters, at least in the period you've tracked them, have underperformed the market? Because as you said, they've been around for a long time.
Good question. Yeah, good question. I mean, it could partly be the season that we're in. So what I mean by that is, and you've been in the market a long time, certain styles tend to come in out of favor for, potentially long periods, right? Value versus growth being a classic one that's often, talked about in the press and all the empirical data and so on and so forth. So it could possibly be not a reflection that those ones that are underperforming the market are necessarily bad. It just might be the style that's in vogue at the moment that's, overtaking the other styles in terms of performance. And look, to be honest with you, again, full disclosure, I think that we need more data, right? So the longer I'm running this thing, the better. The more support I get, the better. The more interest, because that'll just encourage us to keep going and hopefully fill it with more information and so forth. So it's really early days. It's kind of hard, other than sort of my gut feel that I've just given you, it's kind of hard to give probably any more, scientific analysis, if you will, I think. But open to what you guys think, based on what.
I was going to ask you, how long do you think you need before you've ridden through those cycles, so all things being equal, the performance is accurate?
Yeah, great question. Yeah, I mean, maybe not so much accurate is the right description because it's accurate now, but in terms of implying conclusions, from different styles, probably 3 or 4 years, I guess. I mean, what is it? Very long term, an average stock market cycle is what, maybe 15 years, right? From boom to bust and boom again. Again, I stand to be corrected, but this is broad numbers. Most of my clients, if they've got direct equities, I say, look, you need to be in it for at least 5, preferably 7, preferably longer. Not necessarily saying this won't be of value now. And I think what'll be interesting is over time, if we, do like a game board approach. Have you heard of the game board? Vanguard published the game board where every year they've got the 6 or 7 major asset classes and they're color coded, and each year they're kind of shifting around. So, with obviously the top being in that year, the top code or asset class being the best performer, and number 7 or 8 being the worst. And the point of the chart with Vanguard is to show that it's very hard for, to pick one asset class and consistently see it perform over time, i.e. at the top of the game board. So one idea we're working on as we get more data sets for these newsletters is possibly have a game board And again, that'd be a great way to figure out whether these guys are lucky or they're doing something consistently and repeatable. So, time will tell, I think, on that front.
Yeah, and I think the key is the game board doesn't just have the latest period; it also has since inception in there
History.
as well.
That's right.
Yeah, that's the real telling thing, I think, because as you say, every dog's going to have its day.
Exactly.
In the short term, it's the ones that have survived and are consistent that's important.
Or as my old boss used to say, even a broken clock is right twice a day.
Correct.
Yeah.
So,
Simon, just with that, in terms of, you said at the beginning that these newsletters, some of them have been around a long time, but your history on them with Ting only goes back 2 years. Is there any reason why you can't grab the last 10 years of their recommendations and throw those into a report?
I think it'd be extremely labor intensive if at all they were, open to giving you that information. So theoretically, the answer would be yes, right? But how much, how many resources do we have? How many hours in the day? And this is assuming that all of these guys would open up their books and give us their recommendations 10 years ago.
Why wouldn't they? I mean,
possibly, but yeah.
If they've done a good job, just tell them to send you a spreadsheet.
Nothing to hide.
I mean, it's like if they say, "Oh no, we don't want to do that," and you just put that on your website. We invited them to give us their recommendations for the last 10 years. They declined. Read into that what you will.
That's right. I'm not making friends in a hurry here, am I?
Oh no, you're our friend.
It's all that counts, guys.
I guess the other point to make is just on that is that a lot of these newsletters also have a fund, and you can certainly look at the fund history. And I've often found that the fund is radically different in its performance to the newsletter if they actually declare a performance in the newsletter.
Yeah, that's a great point. And again, you've got to, I guess, as a potential subscriber, think about what axe these guys might have to grind, if any axe, so are they producing, in-house products? That's a great example, Tony, with, are they running funds? Are they launching ETFs? And how does that work with this business? And is it conflicted? And does all those kind of things as well? So, there's a lot more work one can do as a researcher on this stuff. We're just kind of challenged by, resources and time and what's going to be, but yeah, some great suggestions, great insight.
Sure.
And, case in point, Intelligent Investor, which is, Alan Kohler, Eureka Report, they've been around a very long time, well-funded, well-backed. Alan Kohler's an amazing commentator, but a terrible market timer, ridiculous. And he's the first person to say that too. Luckily, he doesn't run the newsletter service for the stock picking, as you probably know. But anyway, they've launched an international share fund, like just over the weekend, I think, and they're pushing that in their newsletters. And it's a free world, right? But the trick is to understand where's their edge. What is it? What's their business model? So again, it's about going in eyes open, and hopefully, as a start, a tool like this can at least help people fast track some of the information they might be looking for to make a decision.
Yeah,
it is different every time. It's always different, Tony. It's never the same.
Sorry, that's my. I have to put in an Alan Kohler clip telling Tony that this time it's different. Every time we mention Alan Kohler, I'm contractually obliged to play that clip.
Is it like $1 jar or something? You put $1 in the jar and buy around the drinks on Friday?
Well, we usually play it when someone says this time it's different. And Bitcoin's going to go to the moon and GameStop's going to go to the moon. Yeah.
Interest rates are always going to be low. From now on,
forever.
Forever. We had Alan on the show a few years ago and he was trying to tell Tony this time it's different. It was classic.
Yeah. So just winding back the conversation on how you manage the website. So you said that you put together a dummy portfolio from each newsletter and then rebalance it. So that may or may not affect performance because a lot of these newsletters don't tell you how to actually invest. They just say, here's a recommendation. And it's up for you to decide how big your portfolio is and when you buy and sell. So why did you pick rebalancing and not just, buy and hold or some other style of investing?
There had to be some rules around it. And again, because they're all different in different language, we had to kind of come up with some kind of trigger or catalyst for a change based on their changes or their rating changes. So basically, for example, with Intelligent Investor, which is the more, as you would know, more traditional style of newsletter, kind of like a stockbroker's report, fundamental analysis, an entry price, etc. And they have a buy list and they have a hold list, etc. So obviously, because we're trying to replicate the journey of a typical investor, but not someone who's staring at a screen every day for every minute, we thought, well, we've got to draw a line in the sand and kind of come up with a balanced approach, not the right word, but what's a suitable time frame to review the portfolio. So we thought at month end is a good time to do that. And so, basically in the case of Intelligent Investor portfolio, end of each month, if it's still there on the buy list, great, we'll keep it. If it's on the hold list, well, it's probably still got a good chance we'll keep it as well. So that's just the rule for that one.
Okay. Yep.
If it drops off, then we sell it and we buy the newest recommended buy on their, on their fresh list, so to speak. So repeat that process consistently every single month. What's been interesting about Intelligent Investor is in terms of ranking of turnover, it's been one of the lowest of the universe that we analyze, and as you can see, the best performer as well. So, whether there's a message in low turnover, gets better results. Like there's another insight, over time we might be able to garner as well.
Yeah, good. How do you invest, Simon? After looking at all these newsletters, do you follow on yourself or try and take the best of each, or what?
Yeah, good. Look, I'd answer that two ways. I'll answer the second bit first. Look, another product that we're working on, and over time we might put something together, is trying to build what we call a TING best of, or a TING basket, and maybe whatever system we develop to cherry pick the top one or two from each of the providers and then run that portfolio and see how we go. So that's something, again, in the development pipeline down the track potentially. But in terms of how I do personally, kind of my style, and it's not a recommendation, just answering your question, I'm pretty much a value type investor. I have an accounting and finance degree. I worked on trading desk for 15 years, financial planner for coming up on 15 as well. So the numbers for me work. That's just the way my brain works. But you've got to have, good risk management, the right mindset, overcome those emotions when you're losing money. And that's the hardest part, right? With any of these systems, really, is sticking with it when you go through a tough period. But yeah, broadly speaking, that's what I'm attracted to. That style of approach. So obviously the Buffett style, and you guys talk a lot about that on your website as well. I've noticed. So yeah, but I can't stress enough. That's what works for me. If you're not that kind of person and you subscribe to, or investor, and you subscribe to a value newsletter, it's going to be a disaster, right? Because you won't be able to stick with it. I mean, you hope that you do, right? But so again, another idea with this is to try to figure out, well, I kind of like the way that, Stockopedia works. I'm a numbers guy, and data sets really appeal to me. And I love to screen and cut and divide and cherry pick and have all these themes, or an return on equity filter, or whatever it might be. So that's great for that kind of mentality or thinking or analyzing process. But other people might be visual. So the snowflakes approach on Simply Wall Street, right, is a really quick, efficient way. If you're a visual person, then great, here's how I can build my portfolio. I don't want to spend half an hour reading about, the latest toilet paper they've come up with that's going to make them an extra 1% margin, because they're Amcor, whatever it is. Do you know what I mean? So
yeah,
we are blessed with an abundance of different styles of newsletters.
Yeah, right. So I believe that your day job is looking after clients and giving them financial advice. Do you have a process where you try and take them through the newsletters or the different styles to work out what's going to work for them when you talk?
Good question. No, we don't actually. So this is more developed for those that, I'd say for every client that comes to see us, there's probably 5 or 10 that try to do it themselves. And so we're trying to address that gap in that market and provide a resource for those clients. And as we've been saying, it's useful for me as well, right? Personal interest, my super fund, my investment strategy, etc. But for the most part, they're pretty much standalone, businesses, if you will. So
Okay. Yeah.
at this point.
Yeah, well, my last question is probably following on from what Cam said. Have you had any of the newsletter proprietors contact you at all and try to explain their results in more detail?
Not yet, but it's probably only a matter of time as word gets out.
Cool.
Yeah, well,
I think
that
I'll
was
finish, Cam.
Well, I was going to ask what kind of feedback you've had from the other newsletters. Have you reached out to them and said, "Hey, we're doing this. Do you want to help us? Do you want to get them? Want to give us access to your data or anything
Well,
like that?" Are you interacting with them,
The
or are you
obvious
just
call
doing
would
it at
be
arm's
Intelligent
length?
Investor, wouldn't it? The obvious call would be the two that are smashing it, because I'm sure they want to get the word out. So that's where I would start if I was doing that. But at this stage, I haven't. It sounds like, again, an obvious thing to do. You guys have got lots of great ideas. And it's resources at this point more than anything, just trying to juggle my mainline business and, support this sort of research arm as well. So over time, we may do that. I've been approaching more like I actually literally approached Finder about this, and they said it wasn't suitable for them. But podcasts and just investor education channels, things like that, really, where there might be interest in people using this tool.
You've got to become a TikTok finfluencer. Finfluencer. Sounds like a disease.
Yeah, no thanks.
Yeah. Well, it's great what you're doing. It's you're on the same wagon as we are, trying to de-jargon the industry and show some sunlight on it so people can do it themselves. It's great.
Yeah, I mean, the investment field is it democratized? Is that the right word? Everybody gets a vote, right? Anybody can open an account with $1,000. And I mean, a lot of people shouldn't, but those that do, let's give them the best start they can, right? And as I was saying to Phil on Shares for Beginners a few weeks ago, I think not so much important selecting the right newsletter, but sticking with the strategy when you're having a rough patch. That's where you can really do the damage or hit the home runs, right? And so it comes down a bit to the money management and the risk management. And I think that's where a lot of people fall over as individual investors. So this is only the starting point, right? Buying the stock's probably the easiest thing. It's the rebalancing, the taking profits, the cutting losses, position sizing, all that stuff. Even if you're not a day trader or doing this for a living, as a professional, whatever you want to call it. So I think we as an industry have, there's still a lot of stuff we could do to help people figure that out. So
yeah, no,
really
absolutely,
important.
100%. It's a good point. And in fact, that's probably an issue. I don't know if you want to highlight this, but it's a bit like the league tables that get presented now for fund managers. You don't want people to chase the top performing person on your list, because they probably won't be the top performing person in the next period. They've just had their good run.
That's right. Mean reversion, survivorship bias. Like, again, there's, the data set probably a lot better than me, but, and that's why I think, this is just one tool, right? If over time that it develops some insight that there is one or two of these services that has an edge and they can consistently repeat it, well, that'd be interesting and amazing. We'll see what happens, right? And time will tell. But we know, empirically and statistically that value over the very long term does outperform. But again, it's the very long term, right? I mean, we've had up until 2-3 years ago, as you would know, the traditional growth versus value growth's been smashing it, because of the tech heavy, the tech overweight in that space. And that's obviously screened out from a lot of the value investors' approaches and funds and so forth. So much of the information, again, the devil's in the detail, right? And this is where I think the press have a lot to answer for, even more than our industry, is they just are absolutely, atrocious at reporting information in the right way that gets people thinking in the right way and not panicking and, fear and greed. It's just, okay, again, it gets back to, what axe do they have to grind? They want to get eyeballs on their website. They want people to panic or jump or react because that's how they get paid. So it's, again, when you're doing a homework for a newsletter or a managed fund or an ETF, it's like, well, what's their edge? How are they making their money off you? And if you know that, you can make better decisions.
Yeah. Well, according to the newspapers, we're going to be at war with China in 3 years' time. So this is all kind of irrelevant, really, isn't it?
Well, there goes a jet now, actually. They just shot the first bomb. They're landing at Chatswood. Crazy.
S-
You know what? Paul
Simon,
Koenig, I'm on his side this time. I got to say, sorry.
yeah, you're right. Our newsletter for QAV Lite, which we only started about a year ago, one of the reasons we did is we were talking to one of our club members who said that he had some experience with the Motley Fool newsletter, and he was saying the problem with Motley Fool's newsletter is that they'll tell you what to buy, but they don't tell you when to sell it. And so people hold it and don't know when to let go of it. So, one of the things we do with our light portfolios, we tell people when we're buying something for our portfolio and when we're selling it and why we're selling it, so they know it might be time to let it go. Is that common across the newsletters that you've looked at? You mentioned before that they have a buy list and a hold list, and things just don't appear on the buy list anymore. Do they tell people when to sell stuff and why to sell stuff that's previously been on their buy list, or do they just let people kind of work it out for themselves?
I think broadly speaking, yes, it's a good question and really important one, right? Because it's that money management thing again, and try not to blow yourself up. Broadly speaking, yes, but it varies so widely, Cameron, across the different newsletters. And in some cases, they don't, because it's not their role. So again, classic examples like a Stockopedia or a simply Wall Street, right? It's just a number. It's up to you then to build your own risk management system, which is why obviously it's not for everybody to do that approach. But the more
Right.
traditional ones that you've mentioned, in one way or another they do, but it can be quite slow moving compared to what I've read and what I think you guys do. It's like as long as your clients or subscribers are watching the email and you're exiting and your rule number one's being activated, which I presume is never lose money, right, Warren Buffett, then that works quite well. But again, got to have the person that's watching their inbox, right? Otherwise they're going to miss it. So yeah, broadly speaking, they all address it, but some much better than others, and some have hard stop losses, like stocks down under, for example. They've got huge volatility in their returns, probably one of the broadest, right? So in other words, biggest losses and biggest gains with what we've seen so far, and they're not massively underperforming the market, but they have hard stops, right? And broadly speaking, they aim for a 20 to 40% upside, 20% downside. And I think it's overly simplifying things sometimes, but at least they've got a policy, right? It's transparent. So if you go in there, okay, great. And like you guys on your website, this is what we're targeting, twice the long-term return of the Aussie market, minimal downside, so on and so forth. So you might have multiple small losses in yours, like you flagged, depending on what time you come into the portfolio, but then a 5-bagger or a 10-bagger that makes up for it. So yeah, again, it comes down to disclosure, education, doing your homework, and first and foremost, knowing what kind of investor you are. What resonates with you, because if you can't follow orders and rip the band-aid off when you hit the stop loss, there's no point even having a stop loss, right? You've got to come up with another method as your risk management.
One of our common questions is, I missed my sell point, and it's now down 30%. What should I do?
Same answer as last time. Sell it.
Yeah. 2 weeks ago.
Yeah. Well, where were you when we sent the newsletter?
The other thing we see a lot with our club members, particularly new club members, is they'll come in and they'll know that the rule is to sell. Our rule one is if it drops 10% below your buy price, to sell and redeploy your funds. But quite often people go, I don't think so. They'll go, I'm not gonna, they're gonna do it their own way for a while. That usually lasts 6 or 12 months, and then they go, okay, maybe that wasn't such a good idea. Maybe I should just follow the rules.
Like I say to my kids, you got to learn the hard way. Sometimes you got to learn the hard way.
Sometimes,
the pain of loss.
Nothing wrong with that.
It's how we learn, right? It's how we grow.
Investing university. That's right. Yeah,
exactly.
All right. So just that URL again for people: Ting Live, TING live.com.au. What does it cost to subscribe to Ting Live, Simon?
Great question. At this stage, it's complimentary. So, we're just building it up, testing it. yeah, the more support we get, the better. Over time, we might come up with, you know, some kind of revenue program or whatever. But at this stage, it's really just come along and have a look. The next run will be March end for, you know, updated results. So yeah, if you know, people just jump on and subscribe to the reports and see how we go.
Good
Excellent.
stuff.
Well, really great idea. Yeah. Maybe you should put the
anything that
cost of
gives-
the newsletter subscription along beside the results so you can get an ROI calculation as well.
Again, it's in the Tony, I'll give you a call for some consulting work, huh? I don't think I could afford you, but anyway.
I don't know. Cup of coffee. You'll it's more than I'll get from Cam, that's for sure. So.
We'll make it happen.
Wow.
Huh? But yeah, I have thought about that as well. So, you know, there's so many ways you can slice this information. So the best way to, you know, it's really about feedback, right? Welcome any suggestions, and if you when you subscribe, there's just a, you know, short question in there, just asking people what they're looking for in a newsletter, because we want to make something that's of value to as many people as possible. So,
well, anything that brings more transparency to the investing world, I think, is a good thing. So well done, Simon. Congratulations. Thanks. And best of luck with it. Thanks for coming on the show.
Thanks, guys. Yeah, my pleasure. Let's talk again soon. Okay.